Pursuant to Internal Revenue Service guidance, be advised that any federal tax advice contained in this program is not intended to be used, and it cannot be used by any person or entity for the purpose of avoiding any tax penalties that may be imposed by the Internal Revenue Service or any other U.S. federal taxing authority or agency, or promoting, marketing, or recommending to another party any transaction or matter addressed in this show. The opinions expressed by the host and the guests are their own and may not be used as authoritative advice. Any use of this material without the written consent of the host is strictly prohibited.
Welcome back. I am your host, Attorney Stephen Leahy, and we are here on the IRS Radio Hour on AM 560, The Answer. You know, at the top of the show, they mentioned that I am an author, and I have written a book called Deal with Your IRS Problems
I was going to say, what is the name of the book?
And so if you have IRS problems and you'd like a copy of my book, you should call me at 312-664-6649. You can send a request for a copy of the book to questions@irsradiohour.com. I'll be happy to send you out a free copy.
A free copy?
That's right. Free.
So don't even bother going to Amazon. Just send it to him. He'll send you it free.
That's right. So this is our blog section.
And so, as we mentioned, the blog entry this week is, why was I chosen to be audited? I had that same question one time, and it was the scariest question I ever had in my life.
Yeah, well, it can be scary, and that's one of the questions I always get. People usually come to see me right after they have been audited, because I think I saw a statistic, 85% of all audits result in a assessment of additional taxes. Go figure. And
ouch.
So after there's an audit. Now, I think that you shouldn't wait to get help before an audit. I mean, after an audit, you shouldn't wait till after the audit. You should get help before the audit. But people usually think, well, I'm an honest person. I don't have nothing to hide. I want to help. I'll help the IRS. Not really a good idea.
That's what I thought.
Yeah. So what can they do to me? I'm always honest. I do everything that I'm supposed to do.
I don't have any money. I don't have anything. Why would they want something from me?
Well, we talked.
Believe me.
Yeah, I agree. We talked a little bit about this last week about record keeping, and this is and I think the IRS knows that most of us don't keep good records, and so when they audit you, that's what they're looking for, right? They're looking for records, and nobody has them, and they know that you don't have them. That's right. So they disallow so many of your deductions that's how they come up to say that you owe a lot of money, and then you have to get that resolved, and so. So, again, most people come to see me after. Now, the IRS calls an audit an examination of returns. It's a kind of a nice name for an audit, right? Mm-hmm. We're just going to examine your return, and then we're going to audit you and find that you owe money.
Then they have a red pen. No.
Exactly. And so there's actually three ways that so, again, the question is, why did the IRS audit me? What did I do? And so there's three ways that the IRS goes about auditing people. One is what they call it's a computerized system that scores your all returns. So all returns go through this scoring. It's called the Discriminant Inventory Function System. Isn't that nice? They call it the DIF, the Discriminant Inventory Function System. And it's a well-guarded secret about exactly what they look at, because they don't want you to know what they're looking at.
Because then you won't do it.
Yeah. Well, you're trying to avoid it and try to, it's kind of like a Google analytical, search. They don't want to. The algorithm is secret. And it's kind of the same thing with the IRS. It's a secret. They don't want anybody to know how they're going to go about. But again, what this system does is it goes through every return, and it looks at things. For if you have a big change in income, for example, that might be they call these
red flags.
They call them red flags, exactly. And so, so again, it might be a big change in your income. You might have a lot of deductions as compared to you. So a big percentage of you might say, I have a gross income of this much, and then I have a very high percentage of deductions, and so that will draw some scrutiny. There's, if I have a home office, that's always a big one that they'll come at. They'll come at because people seem to. Actually, if you see with the common thread here, it's if you're in business for yourself,
then they come after you.
They're coming after you. Okay, they don't like people being in business for themselves. They'd rather have you work for somebody at a W-2, and that way they get their money every week. They take it out of your check, and you never see it, and you don't even know that it's yours. And then at the end of at the end of the year, they're nice enough to give you a refund. Of course, they've been holding it for you.
Let's see, do they pay interest on your money that they take from you? Of course not.
Absolutely not. They give it.
But I have to pay them interest on money that I owe them.
That's true. And if you do a amended return, it turns out that they do owe you money, or if they said that you owed money and you didn't, then they will pay you interest back. Very small, and they won't compound it daily like they do to you. Okay, when you owe them money, it's a very small percentage now. It's like 2 or 3%, but it's compounded daily. So even at that small percentage rate, it adds up very quickly, and so that's why you want to try to pay You want to try to pay it. So another way that they go about this, again, the red flags are the big thing, and they're looking at at all these different returns, and they're comparing yours. That's another way they do this, right? They compare yours to what others have reported about you. Okay, so if I have vendors and they're reporting, hey, they got to give a 1099 now. Any amount over $600, you're supposed to 1099. And so the IRS has all this information about what others say you made. And so if I don't report it and it matches that, they compare them and it doesn't match, then there's a very good chance you'll be audited too. And that's also a big one. This happens a lot when people get divorced, and then they both want to take the deduction for their children. And so the IRS,
we've talked about that.
That's right. And so it kind of that comparing these documents shows, they both took it. Both of them don't get it. So then that's another red flag that'll cause the IRS to audit your return. And again, a lot of times this is just a paper audit by mail. So they just look at it and say, wait a minute, you didn't report. We have a 1099 from somebody that said you made the money there and you didn't report it on your taxes. So now we're going to add it to what you owe, and then we're going to compute how much you owe. And that's another way. And then there's the third way is random. So they just pick people out of the blue. So you could have done everything right, and the IRS is still going to come after you.
That's like winning a bad lottery.
That's exactly correct. But they use this as kind of a standard, right? Because if they look at the people they draw randomly, and they say, well, and that's where they come up with this compliance gap. So if I randomly choose taxpayers and then we audit them and we find that there's errors, then they can say, well, this is how the population is, and so if 85% of our sample shows that people comply, but 15% didn't, that's where they come up with this gap.
I remember one of our first shows, we had something from Donald Rumsfeld, who was chief of staff, secretary, all these things. And he said that it doesn't matter what your taxes are. They grab it and you're wrong. It doesn't matter who you have do them. It doesn't matter. No one knows the rules.
I agree with that. And they'll always find something, I think. I don't think I've ever... Of course, I see people who have IRS problems, so I guess if they audit them and they don't find any errors, I wouldn't hear from them. But I don't think that happens very often. I think because of the nature of the IRS code, that if they're going to take a close look at you, they're going to find something in order to find that you owe more money.
And to justify they justify themselves being there. So. The point being is anybody could be out of compliance. So their compliance percentage that they put out, of course, it's probably because it would be 100% of the people that if they checked.
That's right. Have a problem.
They would have some kind of problem.
But a vast majority of people are we voluntarily. Of course, complete our tax returns, and we pay the taxes as they come due. I had a group of clients who came to see me, and they were all being audited from the same company, and they thought that this is odd. Why is this happening? It turns out that they all use the same tax preparer, and they were going to this tax preparer because that tax preparer those that went to him got large returns, and so his business boomed and everybody's telling their friends, I got this guy who does my taxes and I get a huge refund every year. You got to use this guy. So they all started using this guy, and then they found out that the tax preparer was doing things wrong, and the IRS found out. And once the IRS got on that, they audited everybody that he did their returns for. And usually what happens when they audit you, they audit you for 3 years. So because there's a 3-year statute, they go back 3 years. Unless you misreported your income for 25% or more, then they have 6 years. And if they think there's anything fraudulent, then there is no statute. They can go back for as long as they want.
Well, Steve, that's and yet they didn't save those. They didn't save their emails. You tell everybody else to save stuff for 7 years.
Well, I agree with that.
You have to turn everybody into a hoarder.
But you
for 7 years.
You won't be able to turn around and say, you don't keep your email, so I don't have to keep mine. No, you still have to keep yours. So keep records.
And how could people contact you?
So if you've been audited, you should contact my office, 312-664-6649. And maybe you shouldn't wait till you get audited. If you find that they're going to audit you, you should call my office.
That's right.
Visit my website.
After you stop crying, pick up the phone and call it.
And send me an email at questions@irsradiohour.com.
And we'll see you on the other side.